Business today. Our Twitter poll question, of course, is: do you think that the government is doing enough to promote coffee production in the country? You can tweet at KTN News, at Malika Kazia. Our hashtag is KTN Business, and we are getting in your responses. Kinyundo is saying he farms coconuts, actually, and we have Gathu saying that the government is doing nothing to help the coffee farmers. It should have searched for good markets to improve the prices. Do let us know what you think and chime in on the conversation on Twitter. Let's take a look at the insurance sector now in numbers. Just before we bring in the CEO of Kenya Reinsurance Corporation, let's have a look at the numbers when it comes to insurance penetration. Life insurance, 1.2%, general insurance, 2.4%. Insurance penetration total is at 3.44%. After rebasing, 2.93%. All right, those are the numbers for you. But now let's bring in Mr. Jedediah Mwaranya. Thank you so much for joining us.
Thank you.
All right. Now, the Global Credit Ratings Johannesburg-based agency affirmed that the national scale claims paying ability rating for Kenya Reinsurance Corporation is AA, with the outlook accorded as stable this past month. Now, to what degree does this credit rating speak to the corporation's efficiency?
To a very high degree indeed. In fact, to us, it is an indication of the fundamentals of the company. We have put in place measures to make sure that the company continues to be operative, and it is not an accident that GCL found it necessary to upgrade the rating from stable to stable, down from negative.
Absolutely. Now, with that AA rating for national scale claims paying ability also comes greater need for assuring that there's viability of claims. How do you tackle fraudulent claims, and how common are those nationally?
Fraudulent claims are always there. The way to tackle them is, of course, to work together with the insurance companies, because as an insurance company, we get claims from the insurance companies, that is the direct insurance companies. Depending on the class of business we're talking about, we've got ways of checking. For example, in motor, we use motor assessors. For medical, there's a use of the smart cards to check that the covers are not abused by them being used by other persons. And for various classes of insurance, there are various ways of adjusting the loss and checking on its validity.
All right. Of course, Kenya Re has taken the lead in providing reinsurance capacity and technical expertise to both local and international markets when it comes to gas and oil within East Africa. Now, to what degree are investors concerned with the new tax implications from the Finance Bill 2018 coming into effect as law in relation to such investments in the country?
Investors will always, of course, be about the taxes. We all want the taxes kept as low as possible as an investor, but we must also take account of the fact that the government has got responsibility, and part of that responsibility is collecting the necessary taxes for purposes of investment. I think it's a question of getting a balance between the government responsibilities and the citizens' need or duty of paying taxes, but also looking at the business interests.
Absolutely. Now, when it comes to securing risk internationally, what are some of the key factors that come into play for Kenya Re?
Like every reinsurer in the globe, one of the key things that you look at is your own retrocession protection. By retrocession protection, we mean our own reinsurance, because it is our own reinsurance which gives us the capacity to be able to give or to sell that capacity to our ceding companies or the companies that we insure. So we look at the availability of capacity for retrocession in the international market. We also look at the market conditions in terms of the companies that we insure, the political environment environment, the economic environment, the financial systems in those countries. And then we go further to look at the risks that we're insuring themselves. What quality are those risks? What classes of business are we giving? And then we also still further go down to actually sometimes look at the assessment, the risk assessment in respect to specific risks. So I would say you start at the macro level, and then you keep going down from the economy to the country to the specific insurance company to the specific risks being insured.
Thank you, Mr. Morania there. But before I let you go, I think it would be unfair for me not to mention the leadership wrangles that Kenya Re has experienced earlier this year, finally culminating in the Employment and Labour Relations Court ordering your reinstatement after you had moved for alleging unfair termination. How has that impacted the position of the company and your role, particularly within the organization?
2 points to that. The first is that it shouldn't impact on the business because there is a responsibility for every office that we hold to be discharged. And I would say that as far as I'm concerned, I'm discharging my responsibility without any diminishing in terms of effort. As for the issue, being an issue that is still in court because of sub judice, I may not be able or want to comment directly into the case itself. But in terms of responsibility, we are discharging our responsibilities. I can say that specifically for myself.
Thank you very much. That's Jedediah Morani, of course, the Kenya Reinsurance Corporation Limited Group Managing Director. Thank you for joining us.